This Week in the Boardroom, brought to you by corporate board member and host NYSE Euronext, along with governance knowledge partner Paul Weiss and contributing partners National Investor Relations Institute and the Society of Corporate Secretaries and Governance Professionals.
Welcome to our special New Year's edition of This Week in the Boardroom. I'm TK Kerstetter with Corporate Board Member, and once again, for our last show of the year, it's my pleasure to welcome my co-host, Scott Cutler, with the NYSE Euronext. Scott, welcome.
It's good to be back.
Well, this is going to wrap up another year, and this is the show where we like to take a look forward and see what kind of trends we can pass along on what directors and boards should be thinking about as we enter into 2012. But since this is all about looking into our crystal ball, and before we talk about the governance stuff specifically, let's take a look at the capital markets and the sort of the U.S. business economy. I'm going to ask you to look into your crystal ball and share with our audience what your feeling is for the coming year in the capital markets.
Well, my first point is that it's a global business economy. We have a lot of U.S.-based businesses that operate multinationally, but it is a global economy. I think one of the challenges when you look back into 2011, you might look at a stock chart as to where we started and where we ended and conclude that it's been a flat year. But it's actually been anything but flat. We've had crisis in commodities. We've had crisis in geopolitical issues. We've had the U.S. debt ceiling, the U.S. downgrade, challenges in Europe. It's been a really complicated and highly volatile business environment, which has involved both macro as well as microeconomic risks. So the ability to manage through that has been a challenge in 2011, despite the fact that there's been very little overall equity growth. The second point is something that I talked about in the last show, and that is really this shift towards global growth opportunities. If you look at the growth prospects looking forward for most developed nations, it's 0 to 1.5%. If you look at the growth opportunities for many of the emerged or the emerging economies, it's 3 to 6+% growth. So being able to capture that wave is a significant business opportunity, but also a fundamental business shift. The third point is really what are the reasons for optimism. And I think my view from most corporations is that, look, the last quarter, over 75% of companies beat expectations on the bottom line, which is good. Balance sheets are at an all-time high. In the U.S. at least, the deleveraging on the corporate side has largely taken place. We all have challenges with growth and the implications ultimately for employment in the U.S. The other reason that I'm actually quite optimistic is if we look at capital raising, which is the riskiest of investment ideas in our markets, we will have finished the year raising $33 billion in capital at the NYSE, and that puts us number one among exchanges globally in a year that has seen significant crises. So I'm actually encouraged by the fact that there is capital being raised and put into new opportunities.
With all your years in this capital markets business, have you ever seen a time where there is such a gap between the confidence that business has and the lack of confidence that the consumer has? And is that gap or that big divide what's sort of maybe pushing some of this social unrest?
Yeah, and absolutely. The income disparity that we have, the lack of job growth that we have, particularly in the U.S., is a real challenge. It's if we continue on the path, we see what that holds in terms of Europe as an example of that. But even companies that are emerging or emerged, if you want to look at China, China has real big challenges to try and put people into the workforce, drive consumption in the world's largest population economy. And so, even those places have challenges to manage through.
Well, that certainly is something that it affects what's happened in Europe, and all these things just has an amazing effect on our country and our economy. So that's certainly one of the things that everybody needs to keep focused on. Let's narrow our focus down to governance and the board. When you look forward on the trends in the board space, what is the first thing that comes to mind specifically?
The first thing, and we've talked about this throughout the year, has really been the increased need for shareholder communications. The big challenge associated with that as a topic is really the challenge associated with, number one, understanding who your shareholders are in an increasingly fragmented and less transparent equity market. That's a challenge. Secondly, even if you understood those shareholders, understanding what is a long or short-term shareholders, and also understanding that there's a huge difference in the type of shareholder today. Hedge funds, institutional, long-short equity, arbitrage. There's lots of different investment theses today that drive the type of investor. One comment was made to me yesterday in a meeting of, why don't we just move to a system of majority voting? And I said, well, the challenge with that from a shareholder perspective is that shareholders have a very different view as to what's short or a long-term investment. Long-term could actually mean a couple of days. It could mean a couple months. And so all of that has meant that the need to understand your shareholders and understand their views is probably, I would put at the very top of the list.
I couldn't agree more. I mean, if there's anything that's going to affect the boardroom, it's going to be that. You know, there was a push for what's called the fifth analyst call, which was designed to get in front of shareholders about governance issues. And there was even there's a calling to put directors in front of shareholders more, which I think is one of the things that people need to be very careful on, because once you put a director in front of the audience, they better be prepared to deal with all the questions, sure, just like a CEO would. And sometimes you can, with all the best intentions, end up with a real fiasco when all of a sudden the questions are coming in an area that the director's not prepared for. So it's something I think to be cautious of. But the good thing is, if you set the tone of communicating with shareholders and they feel that way, I think that's going to be a positive. That probably touches a little bit on what I want to say, and that is one of the trends that I think is going to happen this year, and you mentioned it, is in the larger companies, we've seen pushes on classified boards, majority voting, special meetings, lowering the threshold for special meetings. That had been reserved for the larger companies. I think this year we will see the trend where that starts to trickle down, and a lot of companies are going to be subject to these. In some cases, you may want to be proactive. I'd say in some cases. I'm not sure in all cases you want. But in some cases, you may want to be proactive with that. But for sure, mid-cap and small-cap companies are going to start to see the same kind of shareholder proposals that large companies is. That's a trend that I think will continue.
Yeah. For me, probably the third point that's really more related, it's a macro point. I made it in the observations for 2011, and that is going forward. I think the importance of understanding the regulatory environment, the shifting regulatory environment, it has to be a key consideration and a key strategy at the board level, because the implications are very serious, and yet the strategy has to be taken equally serious, and you have to be proactive at the board level to take into account these changes.
Well, there's no question we spent a fair amount of time on that, and even in your opening comments, it touches on the global. It just affects almost everything that we do in business, and certainly in the boardroom. So it's certainly a major trend that we have to focus on and provide education, which I think is probably my next point on one of the trends. I think we are going to see some interesting developments in board education this year. All the things we talked about are the kinds of things that boards are going to have to stay on top of. Sometimes when we think of education, we think of something more elementary, but it's really about staying informed and the ways to stay informed. Companies do a very good job with in-house. There's plenty of service offerings, product offerings from people like ourselves and other organizations to provide education as well. But I clearly think that companies should, and this is not so much a trend but a suggestion, they should be communicating more about exactly what they're doing in this space. If you're holding meetings in-house and you have programs where your people can get educated, you need to set the tone for your organization that you are aggressive in keeping your board informed. I can't understand why that wouldn't be a good thing. And when you see the qualifications and experiences, nobody is addressing the issue. Everything is, as I say, lawyered up, or is a very, very standard language. Tell them what you're doing. Tell shareholders how active you are in the keeping your board informed, in-house or in the programs that you do. It just doesn't make sense to me that companies aren't being more proactive. And I think it's going to be a year where you're going to see a lot more of that.
Yeah, I would agree, and I think you make a great point about the need to, which sort of dovetails with the first point about communication, and that is really being proactive around what the corporate governance strategy is, how you're implementing that, how you're educating your board, and then ultimately how you're communicating out how that impacts ultimately business results for a company.
Well, you know, it is going to be an equally exciting year, okay? And there's some people that we need to thank. I know you and I enjoy doing this. This is a great opportunity for us to communicate out to not only shareholders, but most importantly, directors and senior management. Special kudos have to go to Paul Weiss. Without their support, we would not be able to do this show. And again, the following has grown continuously. We're very pleased. I want to thank all the partners at Paul Weiss for their support. We have also had support by the National Investor Relations Group and the Society of Corporate Secretaries and Governance Professionals. You know, we couldn't ask for two more important support arms to the board, and they have been very supportive on this show as well. And lastly, I want to thank you. I know between your busy travel schedule, no one I know travels like you do, okay? But it's been a pleasure doing the show again with you this year. We'll look forward to a great next year. Thanks to the control room for everything they do to make us not look worse than we are. But with that, we want to wish everybody a happy holiday, a wonderful new year, a prosperous new year, and we'll do our best to bring excellent programs to you that will help you be a better director and a better committee member. So from Scott Cutler and TK Kerstetter, Happy New Year, and we'll see you next year.
Join us again next week for This Week in the Boardroom, brought to you by Corporate Board Member and host NYSE Euronext, along with Governance Knowledge Partner Paul Weiss and contributing partners National Investor Relations Institute and the Society of Corporate Secretaries and Governance Professionals.